Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. I teach the art of trading at Trading University. First market we'll take a look at will be the Australian US dollar. There's the Aussie USD, and I've got that same pattern on there. You can see that green box, and you have to take this uptrend seriously. That's a primary pattern. Primary pattern it held back in the spring there, and you got a nice bounce off of that. Sure, short term you may have some downside, but that's a formidable level, 72 even. It really, as is the historic bottom down here, just below 70 even. So long term, we have to look at the Aussie in a different light now. Overall, really, time has shifted that long term primary pattern higher. So from an investor standpoint, this guy's open from our perspective anyway, open to buying dips, and our big MO here, our belief system is that the pattern on the chart is a reflection of underlying fundamentals, and that pattern is definitely bullish long term. Next market, the Swiss franc. Swiss franc, interesting pattern for sure. Being a pattern guy here, I'll break it down for you. Long term, your primary pattern's up. You can see that trend line is up. This intermediate pattern down. On the other hand, your 60-day pattern, very important pattern for us, is up. Now, I'll tell you why it is up. It may not look it initially at first blush here, but see that green level right there? You would have, right there, the support there, you would have needed 2 daily closes below that to shift that 60-day pattern. The 60-day pattern, it's a pretty influential pattern, no doubt about it, and you usually get pretty good swing trades against it. Well, it held here. Yeah, I'm a broken record on this market. I love it from the long side, and here's why I love this particular setup. We're looking at 3 patterns. You're looking at your primary pattern indicated by the trend line. You're looking at your secondary pattern down, the pink box, and then this new green box, that's your 60-day pattern up. So 2 out of 3 patterns are bullish, and you're getting to buy it at the bottom of that shortest term pattern right there, and right on that, well, it's at the bottom of both your primary and your 60-day pattern. So love that market on the upside. I can't help but looking at the Aussie, how it's evolved, and I like it long term now. Still like buying dollar Swiss here. To me, that got me thinking. I thought, well, let's take a look at Aussie Swiss and see what there is to see here. Fascinating market here also, in that your primary pattern's up, that light green box, and then your secondary pattern's up also, that darker green box, and you're getting a shot at buying it at the bottom of that secondary pattern. So love this market long term, buying Aussie Swiss from an investment standpoint too, and I love the risk too, because you don't have to risk it much below 70.40 there, and it's coming up on that level right now. Generally, big moves start with a quick, fast move the other way, essentially to knock out stop. So I love this market, but I also know I have to size it right to where I can withstand. I can hold a position. I can withstand if they go down to that level here, even below it, and knock stops out. So be careful. I like to trade. If you go long it, size that position where it's small enough it's not going to sweat you. And it's also small enough where you don't want to have to worry about having a stop in down there, because you can put a stop right below that line. Guess what happens? They go down there and knock it out. That's why I like this as an investment, not a trade. Next market, dollar index. Dollar index, I'm a broken record again. You're in this massive sideways range following a huge rally up. So essentially it's a bull flag, and in a bull flag you want to pick it up, you want to buy it towards the bottom of the range, and any approach, below 94 even, you want to look at picking it up long term. Again, more of an investment than a trade here. I'm still hesitant to trade this guy from the long side until I really get successive closes above 96 even, or so, actually 96.40. But nonetheless, I'm a broken record. It's an investment, and here's another chart where you got the secondary pattern down, but that 60-day pattern held. Very influential pattern. And again, to us, it's very simple. The pattern on the chart is a reflection of the underlying fundamentals. You don't need to know all the ins and outs of all the fundamentals. You don't need to get distracted by the latest headlines, get confused trying to figure all that out, what's going on from an economic standpoint, from a government policy, certainly demographics. Those are the most important. Just rely on the pattern on the chart, because that's a reflection of that. So U.S. dollar index, we think it looks great from both a short, intermediate term perspective, I should say. The 60-day pattern looks good, and then the primary pattern looks good. But you're still fighting bearish headwinds here based on that secondary pattern, which has really gripped that market year to date. Next market, the euro. The euro, you could see that uptrend. It's still very much in an uptrend. Again, similar, looking at all the charts, that's the intermediate term pattern there, a big pattern. You know, this chart reminds me of, let me pan out to a weekly, it reminds me of 2 years ago. It reminds me of right in here. It reminds me of the beginning of the summer of 2014, and I remember that because we were waiting for this guy to top out, and then in our classes we take a summer break, and the market really didn't start to go down in earnest till we were on our summer break. And it wouldn't surprise me at all, markets being cyclical, etc., if it does the same thing. It waits for us here at Trading You to take our summer break, and then you get the big rip down. But here's what really reminds me of this last rally up in 2013, in 2014. Everyone was waiting for this market to top out, and it just took forever to top out. By the way, it did top out right at a 2/3 retracement right there. You take that high to low, boom, stopped at 2/3. But see these legs up, those last 4 legs up, took forever. Even that when you had that 3rd leg up, you thought, oh, that was it. And it did. Look, it took 1 more leg up, knocked out the stops. Great lesson here on this chart. Hopefully you guys can make out that wick right there. That was the last higher high. Almost kissed 140. You have to watch that. You can have a position. You can be short here and be right, but if your stop is too close, they're going to knock you out at the top. You're going to get discouraged if you don't get right back in that trade. It's going to be no fun watching that trade move without you. So that's why I caution you right here. But you see you had the 4 legs up. Right here on this chart, so far we have 3 legs up. It really reminds me of this time 2 years ago. Here's your 3rd leg up. So I'm really waiting for that 4th leg up before we can tee off on that thing. I have long-term positions in there. I wouldn't mind shorting it, but you just have to be patient and let that guy turn and then go after it as a trader. But from an investor standpoint, very interested in shorting the euro at these levels up above. A perfect world to give me a double top at 116, I'd be all over that. So you have to keep an eye on that euro long-term. Shorter term, more intermediate term, you still could have some more upside to her. Gold market next. Gold overperformed here on the way up. There it is. It got through resistance right there, but you know what? It gets through the shorter term, intermediate term resistance. But guess what? It's right at long term resistance. So to me, it looks like you have potentially a massive head and shoulders setting up. To me, it's not the formation so much; it's the resistance up above. Big time resistance here. Let me pan out to a weekly chart, and you can see where that trend line comes from. Yeah, that's just a down channel over the last couple of years. So that's your primary pattern down. For our money, based on this pattern, that's still a bear market rally you're looking at right there. If it starts to claw above, you get a couple weekly closes above 1,300, a monthly close above 1,300. Maybe you'll make a believer out of me that we could see a larger short covering rally in the context of this larger bear market that you've been in now. That's your grand pattern is now bearish. You've been in a bear market for several years now. You've been in a bear market going on 5 years in August. So yeah, your grand pattern definitely down in gold. Last market we'll cover 10-year notes, U.S. interest rates. Boy, you had some more upside in there. You know, the bulls just don't want to give up on this, and it's older money too. Older money, they're not going to go into the stock market. If they've been on the sidelines the last 4 years in the stock market, they're definitely not going to go in at what they see as inflated prices in stocks now. So they continue to mass into the 10-year notes here. Look at that. You got a weekly close above significant resistance. However, when you look at the pan out to a weekly chart, the big picture, you're still clawing away at resistance up there, and we still see this as the higher high and this as the first lower high in a succession of lower highs. And you know, it's just taken forever for this thing to turn. Here's a monthly picture over there, the monthly interest rate picture, U.S. interest rates, and you know, they're going at it again. They're trying to run them again. But it's just a patient person's game. You don't want to be short this market because you know what? If you're short it, that means you're the one paying the interest, right? Anyone who's long that is getting interest. You try to short it. You try to go short an instrument, credit market instrument, interest rate instrument. You're the guy that's paying the interest on it, right? It makes sense, right? If the buyers are getting an interest rate to hold that, then the sellers have to pay that interest rate. That'll do it for us this week. Again, my name is Jay Norris. I teach trading at Trading University. Thank you so much, and we'll see you next week.